In this video, we will focus on earnings momentum, which is one of the core components of our system. It plays a crucial role in helping identify the strongest companies compared to weaker ones. The model relies primarily on financial data, specifically from the income statement, which reflects business activity rather than the balance sheet. To calculate the earnings momentum score, we use 4 key variables: free cash flow, profit margin, sales, and earnings per share. Each of these variables is evaluated historically, and together they produce a score that ranges from -50 to +50. For example, let's look at the earnings analysis widget. It allows you to monitor quarterly sales and compare them with the same period of the previous year. In this case, sales were $44 billion, compared to $26 billion the year before, representing a 69% increase. However, when comparing the growth rate, 77% previously to 69% now, we see a slowdown in acceleration, marked as -8. This demonstrates how the system not only captures growth, but also whether that growth is accelerating or decelerating. We apply the same approach to earnings per share, profit margin, and free cash flow. The result is a score, not a ranking. This is an important distinction. A ranking system may average out weaker stocks, while a scoring system provides a clearer measure of strength. When it comes to earnings per share, we consider 2 different measures. The first is the widely used street earnings per share, often based on methodologies from providers like Zacks. The second is earnings per share before non-recurring items, which excludes unusual events such as stock option expenses or one-time gains. For technology companies, these differences can be significant. In some cases, both measures align closely, while in others they differ considerably. For our calculations, we use the street earnings per share, along with sales, profit margin, and free cash flow. The resulting earnings momentum score is then plotted on the chart for every quarter. By hovering over a point, you can see the details. For example, an earnings per share change of 32% and a sales change of 69% in the first quarter of 2026. This scoring system is highly valuable because it combines fundamentals with technical analysis. While most charts only display price movements and technical indicators, our system adds a single summary number that reflects the company's underlying fundamentals. For instance, looking back at 2020, we can see a period where earnings momentum was -22, -21, -15. Yet the stock price began to rally. Shortly after, the earnings momentum turned +16, +23, +26, and then +20. Any value above 0 is considered positive, while scores above +20 are extraordinary. In fact, on February 13, 2020, the earnings momentum score reached extraordinary levels when the stock was trading at $7. Within a year, the stock price had tripled. The chart also shows downturns. For example, scores such as -22 or -26 reflect weakening fundamentals, often signaling a decline. Later, when the score turned +22, it suggested another rally opportunity. More recently, a similar setup was observed when the stock was priced at $49, and it subsequently rose to $171. The widget also allows you to overlay other metrics such as earnings per share and sales. This forecast shows where earnings are expected to go. For example, after almost a year and a half of upward revisions, estimates started to decline, clearly signaling a shift before recovering again. By combining all these variables, earnings per share, sales, profit margin, free cash flow, and estimates, on a single chart, the system provides a comprehensive view of both current performance and future potential. This makes it possible to quickly separate strong companies worth further analysis from weaker ones that would likely waste your time. Earnings momentum is integrated throughout our platform. For example, in the Screener tool, you can filter stocks with an earnings momentum score greater than +20, or look for companies with upward revisions to their earnings estimates. Any stock you identify can be added to your watch list or monitoring dashboard where the data updates in real time. In summary, earnings momentum is a cornerstone of our system. It combines financial fundamentals with price analysis, helping you quickly identify companies with accelerating growth potential. This approach makes it easier to focus on stocks with strong fundamentals while avoiding weaker ones. Thank you for watching and taking the time to learn more about earnings momentum.